Welcome to my channel. Please like, comment and subscribe. Americans buy life insurance for various reasons. Maybe it is to provide an income for the spouse, pay off a mortgage or fund future college expenses. Or it could be to pay for a funeral and final expenses. No matter your reason for buying life insurance, it is important to name a life insurance beneficiary. A life insurance beneficiary is a person or entity you select to receive the death benefit from your life insurance policy when you pass away. The beneficiary is paid the death benefit because your life insurance policy is a contract between you and the life insurance company. That means the face amount of the policy goes to your beneficiary regardless of what your will, probate courts or family say. You can choose more than one beneficiary, and you can choose how much of the death benefit goes to each person. Life insurance policy can also be used to keep business, especially family business. In this case, a company could be named as the beneficiary because the so-called key man or rainmaker is no longer there. The life insurance amount you can afford and the nature of the policy could affect who you are likely to name as the beneficiary. For the example, consider these types of life insurance. Number 1, a term life insurance policy with a time frame of 30 years might suffice for seeing your children through college or maintaining a business. And then number 2, a small burial insurance policy would pay for your funeral. Number 3, a universal life insurance policy may be an effective way for those with assets to pass them on to their heirs. Whatever the need, it is vital to choose the best beneficiary. A primary beneficiary receives the death benefits when the policyholder dies. But what happens if the primary beneficiary is dead or somehow cannot collect the death benefit? That is when you need a contingent beneficiary, sometimes called the secondary beneficiary. You can have one or more primary beneficiaries and one or more contingent beneficiaries. And here are the difference between primary and contingent beneficiaries. Primary beneficiary receives the death benefits when the policyholder dies, while contingent beneficiary receives the death benefit only if the primary beneficiary is unable to receive it, such as if the person already died or does not want to handle the death benefit. It is wise to name at least one contingent beneficiaries in addition to a primary beneficiary, just in case. You could name family members, friends, charitable organizations, children or the guardians of your children if you were to die. The policy's death benefit goes to the policyholder's estate if both the primary and contingent beneficiaries die before the policyholder. You can name anyone as a life insurance policy beneficiary. Charities, trusts and estates can also be named as beneficiaries. Keep in mind that some state laws may require you to name your spouse as your primary beneficiary, getting at least 50% of the benefit. In some states, you may be able to name someone other than your spouse as a beneficiary if you have documented permission from your spouse to do so. Think of naming a life insurance beneficiary as a way to provide funds for who or what you want: your spouse, a favorite charity, a pet, and your own funeral. In most instances, policyholders focus on the ones who will most need the payments if they die. This is the person or persons most reliant on your income or savings. And here are the way to choose a life insurance beneficiary. First, designating a beneficiary. There are two options when designating a beneficiary. Those are revocable. In this case, you can change who you want as beneficiary at any time during the life of your policy. And then irrevocable. An irrevocable beneficiary cannot be removed from the policy or have their share of the death benefits changed without their consent. An irrevocable beneficiary must must also be notified if you cancel the policy. Thank you very much for watching. Don't forget to always keep your like, comment and subscribe.